All right, welcome to this week's episode of Old Gold. Today we've got our very good friend Mario Innecco on. I'm sure you guys know him from his YouTube channel, Innecco64. I think most of you watch him already, but if you don't, I would highly recommend to check it out. It's always great to have him here on Old Gold. Mario and I have gotten to do some really awesome traveling together around the world, and he's become not only a good friend, but a great travel buddy, as we always have some pretty fantastic discussions about global politics and things when we're sitting in random bars or restaurants in various corners of the globe. And of course, his lovable dog Rudy is our official mascot here at Chancery. So it's always great to see Rudy as well. I don't know if he's there on the couch or if he's sleeping on the floor. But in any case, welcome back to Old Gold, Mario. It's great to see you, buddy. You guys have been having some unusually hot weather this summer. We were just talking off camera about how much golf you've been playing this summer. So that's really cool because I know that's your favorite thing to do. I know you've been getting your fill.
Yeah, unfortunately, Rudy is not here. He's with my wife, but he's on the sofa there on that cushion. So yeah, and the weather is it's very dry here. It's like a drought, really, but it's cooling off a little bit. But we can't complain because we get a lot of rain when it's not summer. So
Yeah, you guys have been having a pretty good summer. I've got a lot of friends in the UK, and they're pretty excited about it. Lots of time outside. I wanted to mention, so the last couple of days you put out some really great episodes. The episode with Lynette Zhang, you were talking about some things, kind of what, in a nutshell, the biggest wealth transfer in history, and she kind of referred to the 1920s as well. But that discussion in general was really cool, and I'd have to say I agree with her 100%. Her whole take on crypto and what's behind it and where it's headed, and I really enjoyed that part of your conversation because I really align with that, and I know you do too because we've had conversations about it. So one thing that I wanted to bring up, and obviously we can see that Jeremy is in the episode today as well. Jeremy and Mario are headed to Finland to go and see Laiva. We have an open campaign right now. We're raising for Laiva before they move on to production and then to their IPO. So, Jeremy, I'm going to let you talk about that for a second.
Yeah, no, really excited to be traveling with Mario this week up to Finland to visit the biggest gold mill in Europe. And there is a pre-IPO round that we've launched, a small round. It lists in September in Canada. But as you said, Mario is one of the great travel companions, and we're going to have a lot of fun. And I think, Mario, you've never been to Finland before, have you?
no, I haven't, and I'm looking forward to it. The land of the midnight sun. I think the sunset right now is around 10:30 where we're going. I checked.
Yeah, if we went a month ago, it would be endless summer. But now I think they get dark by, I guess it gets dark by November for full midnight. Well, yeah, dark. So yeah, we're really excited. Live is in great shape. And after our visit to Brazil, that was the first trip back for Mario back to Brazil in 11 years home. So didn't we all have a great time on that visit? So I wish you could come, Old Gold. You'd have a great time up in Finland, mate.
At the moment, I'm in the States, in Florida, so it's much more of a lengthy trip for me than it is for you guys to get up there at the moment. But for anybody who's interested in that round, the link is down below. We can send you any information you like on Laiva and what's going on there. As Jeremy mentioned, they do have the largest mill in all of Europe, so it's a pretty big mine. Chancery Royalty, of course, is still open as well, so the link is down below. If you have not already inquired or got the information that you need about that, you can always hit us up on either of these campaigns. And one of us, whether it's myself or Jeremy, Max, Ed, Jamila, Jen, one of the team will get back to you, and we'll work with you to make sure you get all the info you need. And if you decide to participate in the round, we'll guide you through that as well. So, but switching gears from that, the reason that we wanted Mario on is because Mario is such a good conversationalist about the things that, of course, we like to talk about. So one of the things I wanted to bring up first is sort of, the monetary system looks like it may be, entering a new era. And Mario and I have kind of talked about this before. And of course, if you watch his channel, you'll hear him talk about these subjects. But what's your take on that, Mario? We're really entering sort of new territory here as the sovereign debt crisis really unravels. And of course, that affects everything. So How do you feel about it?
Yeah, I mean, if you look back at 1971 when Nixon took the U.S. off the Bretton Woods agreement, it wasn't really a pure gold standard, but it was like the U.S. was fixed to gold, and then all the other countries' currencies were fixed to the dollar. We've had 51 years of a fiat currency debt-based system, and that's never happened before. And I think, as Voltaire once said, fiat currency always goes to its intrinsic value of zero. So I'm not surprised we're seeing so much chaos, not just financially and monetarily, but also geopolitically. When empires get to this point, uh, it, there's something called Thucydides trap, which is a tough word to say, and it's basically it says that waning empires will do anything to stay in power, and it looks like that's what the U.S. is doing right now. And unfortunately for the U.S., I don't think they will succeed. It's just it's just gonna get worse and worse. And gold and silver, historically, they've always held their value, and they're like outside the system. So I don't see things improving. Yeah, the fiat price of gold and silver might fluctuate and might frustrate people a little bit, but I look at it as insurance, and insurance policy that you don't need an insurance company to back it. It pays off every time, and there's no like loopholes.
Well, we're definitely aligned in that thought. What was interesting when during your conversation with Lynette on your episode, was it yesterday or the day before? But anyway, uh, when she was talking about, throughout sort of modern history, I guess, not even modern history, but the last 5,000 years or so, that you're always able to change currency for gold, but or rather gold for currency, but not always the opposite. Is that correct? So I thought that that was a really interesting point that she made because, well, it's true. So, yeah,
Yeah, I mean, even Alan Greenspan said once that in extremis, during times of chaos and war, uh, only gold and silver really are accepted as payment. So
yeah,
I think we're definitely going into that. We are already in that kind of environment.
yeah,
Globalization, as we saw from like when China joined the WTO in the early 2000s till like maybe 4 or 5 years ago, that's really falling apart, and the
yeah.
whole world is splitting up.
Yeah, you and I have talked just privately about China and its role as things unfold into the future, going into the 2030s. And obviously, it looks like China's probably going to come out on top. In fact, I said probably, but I don't think it's probably. I think that's a pretty sure thing. And the question that I have attached to that is, as confidence in government debt continues to really deteriorate as we go forward, and I think that the average Joe maybe doesn't really see people just live their lives, right? So people like the three of us, we're in this business and we have to keep our finger on the pulse of what's actually happening and what's connected to everything else. So we kind of understand all this, but I think that right now the average Joe doesn't really understand the sovereign debt crisis and that we're actually really starting to unravel at this point, especially at the core, Europe and the UK and the US, right? So as this starts to move forward and the average Joe starts to realize, oh no, like what's this is all kind of crumbling. What do you think is going to replace ultimately? Um, right now, U.S. Treasuries are sort of the world's reserve asset. The U.S. dollar is the reserve currency. Where do you see? How do you see this changing in the future?
Yeah, I mean, we've seen recently that gold has actually taken over treasuries as the major reserve asset. So I think that's the way it's going. And even silver, I think, is going to take over. And unfortunately for the average Joe or the general public, the the implosion of the debt-based treasury government bond system, because that's what backs all the currencies. That's going to translate into a higher cost of living, which we already have. higher prices. Yeah, I think we're going to get hyperinflation for all the basic necessities and maybe some kind of deflationary collapse for luxury goods that you don't really need. So the thing is, holding gold and silver, I think, will go a very long way if you're able to keep a hold of it. Because from what I've read historically, and I've spoken to some people who lived, let's say, for example, in Romania in the 1990s, keeping a hold of your gold and silver in these kind of turbulent monetary times is really tough. So the other thing, Eric, is that you need to have a good, close relationship with the community around you, because you're going to have to help each other as well, because the money or the currency will fail. So you're going to have to do a bit of bartering.
Yeah, in an extreme situation, which is quite likely in a lot of places in the world as we go forward into 2030 and beyond, that's a pretty likely scenario. I would agree with you there. And what you just mentioned is sort of, governments turning to gold. We're talking about the central banks there, right? So at the moment, the first leg up that we just saw, this really aggressive move up to 5,500 in gold, was pretty exciting for people like us because that's our business. But retail is not in it. So, that move was really mostly governments, right? Central banks, a lot of it, China, buying up a lot of gold, and sort of at record levels. So that in itself is sort of an indicator of where we're heading. And I know that you've talked a lot about that on your channel, and we've talked about it privately as well. But is this something that you think eventually retail investors, the average Joe, is actually going to pick up on?
Yeah, definitely. But the price of gold and even silver is getting so much higher that even the average Joe is going to have a tough time. They'll probably get involved more in silver and the miners. But I definitely think like the top 10%, they're heavily involved in the stock market in the US at least. They will shift towards precious metals, because they're going to realize that even though tech is still doing well, it doesn't hurt for them to move a little bit of their capital into gold and silver. And I think like the precious metal sector is only about half to 1% of all investable assets, and historically it's been as much as 11 to 12%. And also for central banks and governments, that's picking up. It's almost like 20%, and I could see it going to 40 or even more. Yeah, and we might see products that allow the general public to get involved with gold, maybe more fractional gold, because 1 ounce of gold is getting really difficult for the average person to acquire.
That's a really good point, and I think that's sort of inevitable for the reasons that you just mentioned. I think once the average Joe really starts to clue into, the fiat currency is really headed down, down the proverbial toilet, that everybody's going to start to be interested in precious metals. But at that point, precious metals maybe, to buy an ounce, maybe out of the realm of possibility for a lot of people. So fractional ownership has to come into play at some point.
Yeah, I mean, if you look at countries like Brazil, where we were a few weeks ago, the more things get worse in terms of inflation, the more wealth inequality that is. And recently I saw these statistics that pointed out that the top 1%, they own like a huge chunk of all the assets. The top 10%, they own like, I think 80%. And the bottom like 50 own only like 1%. So yeah, unfortunately for the general public at the bottom, it's going to get a lot worse. And I think we could see a social unrest because of that. That's the other thing we need to focus on.
I absolutely agree with that. And I think it's not just a possibility. I think it's inevitable, because historically, that's what happens, right? When things really start to unravel, that's when we've seen a lot of social unrest um, in the recent years over different things, but I think that that's really going to accelerate at this point. It's certainly not going to calm down. I don't see I don't see it going any direction except a little bit worse as things get worse and loss in confidence in government, right, gets worse. But of course, if you're in the business of gold, then that's probably a good thing because then the price of gold is going to run up. That's really I see gold as sort of above all else, it's really a gauge of people's confidence in our systems. And when our systems really start to fail, and financial system fails, and governments start to fail, people run to gold, and that's been true for thousands of years, right? So I don't think this is any exception. Um, I want to kind of switch. I know that you've spoken very critically of crypto and Bitcoin. We're very aligned in that. You and I have spoken privately about that. But do you think that Bitcoin has become a risk asset at this point?
Well, it's definitely kind of tracked like the Nasdaq, so
Mm.
I think so. Even though when I started following it, like in 2012, it was supposed to be an alternative to the
Yeah,
fiat currency banking system. And when I spoke to Lynette as well
yeah.
about stable coins, they're supposed to link crypto to the dollar to make it stable. But I think they might be using that to as a transfer of wealth, as she said, so that
I Yeah, I completely agree with that. When she said that, yeah, I almost jumped through the screen because that is what I've been talking about, and people have been kind of poo-pooing it. But what she said is, I believe, completely on target. Yeah,
yeah, and I don't think it's. I mean, we have to be, I guess, in the mainstream system, and if
hmm,
that becomes like a tokenized stablecoin system, we'll have to deal with it. But the important thing, like she said, you need to have some physical gold and silver outside the system.
yep.
And I mean, we can't really just exit the system completely unless we want to live somewhere like, yeah, outside society. And I'm not like saying people should do that. It would be great. But yeah, I think gold and silver and yeah, even barter will be a good way to hedge against that.
Yeah. Um, I would wholeheartedly agree with that. Um, your most recent episode on your channel was talking about Japan and how it could really trigger the next debt crisis. So let's touch on that because I don't know if a lot of people really understand that. So let's, what's your take on it? Obviously, I don't want you to go through everything that you went through on your channel because it might take a long time. But what's your summary in a nutshell?
Well, basically, Japan had a huge bubble in the 80s, and then in 1989 it collapsed. The Nikkei almost went to 40,000, and the Japanese government did everything to bail everything out. That's where the original zombie bank term comes from in the 90s. And ever since then, they've been like digging deeper and deeper hole. And in 2013, Shinzo Abe, the prime minister who was elected then, he decided to really increase like yeah, government spending, deficit spending, and the BOJ was played right along with it, kept rates at zero or negative in order to weaken the yen because the dollar had dropped to like 80 versus $1 was 80 yen. Don't forget, like during the Bretton Woods system, a dollar was 360 yen. So they needed to weaken the yen because Japan depends a lot on exports. So that's what we've had these last 13 years. They call it Abenomics, but now it's gone so far, and Japan is in so much debt. And they've been talking about, oh, Japan has a deflation problem. It's negative. But now Japan has the cost of living is going higher and higher, especially like the basic necessities. And so I think the new prime minister, well, relatively new, Takaichi. She wants to reverse that. And the problem is that Japan, they're a really huge saving nation, and a lot of their big pension funds, they've taken a lot of their savings and they've bought government bonds in the rest of the G7, like the US, the UK, and Europe. So if they're gonna like reverse that, they're gonna have to sell treasuries, gilts, bunds, and all the other government bonds, and that's gonna drive rates higher, which is already happening. And then you have China as well, who's like abandoning treasuries. So yeah, it's a big problem. And on Friday, the Bank of Japan met, and they they were supposed to raise rates. It's still only at 1%, but they raised like from last year from 0.5% to like 1 now, and they didn't raise rates. And we found out on Friday, yesterday, that even the US Treasury through the New York Fed helped the Bank of Japan intervene to keep the yen from dropping. So what it shows me is that the US Treasuries, they're not really concerned about the yen. They're concerned about the fact that treasuries could be sold off by the Japanese. So it's a real problem, not just for the US, but for the whole G7 nations. And I don't think there's a way out. There has to be consequence. I mean, for the all the money printing and borrowing that Japan has done, I think their government debt to GDP is like 230 to 250%.
Yeah, it's a little too late. Basically, it's kind of we're past the point of no return, I think. And for me, I sort of look at everything cyclically, and I just think that this is just a cycle. And regardless of kind of what governments really try to do to unwind it, we're, like I said, we're kind of past the point of no return. That cycle is already well underway, and we're now just going to have to let this play out. And the restructuring of the whole monetary system is eventually going to have to come. And like we spoke about at the beginning, in my opinion, I just think most likely China is going to be the one who comes out on top of that. So yeah, that's just my opinion. I don't know. I know that you and I have talked about it, and I know that you kind of feel the same. But I don't know everyone else's opinion. I just see kind of the writing on the wall. I just see this as a cycle, and I think that's where we're headed. So, and that's why we're all very bullish on gold and silver. You know, uh, Switching gears a little bit, talking about sort of the undervaluation of miners currently. Now, obviously, the three of us are in the business, so we know a lot about junior miners. But miners always lag the price of gold. But at the moment, considering that gold is now basing at around 4,000 an ounce, which if you have even a medium term view, you realize that that's pretty incredible considering where we were a couple of years ago. Even though we've corrected from 5,500, the next leg up could potentially be pretty explosive. And, the miners obviously have a long way to go. What's your take on that as far as undervaluation of junior miners?
Yeah, I think the general investors, they still don't really recognize the value of the miners right now. And but I think even though like tech could continue to go higher through like the pumping of liquidity into the system, people are going to start waking up to the fact that the cash flow in the miners is much much higher, and there's a lot of value in there. And with the correction as well that we've seen since the end of January in precious metals, the miners and silver as well, they usually correct quite sharply, but when the market rebounds and takes off again, they're going to outperform gold, and so is silver to some extent. So yeah, it's frustrating, but I think yeah, the mining sector is probably doing a much better job than they did back in the early, well, like from 2000 to 2008. I think there's a lot of wasted capital by the miners back then. That was one of the things, but now that's changing, and I think it's a huge opportunity being long the miners. I'm not sure about the exploration companies. That's a different story. That's junior exploration gold and silver companies usually don't. Yeah, it's very risky. Maybe 1 out of 10 succeeds, but those companies that are producing, or like the companies we work with Chancery, they're like restarts. I think they will do very well.
because there's we've spoken in earlier episodes about the cost of rebuilding a facility like Pilar, right? And Jeremy can speak to this a little more specifically as far as numbers. But Jeremy, how much do you think it would cost if somebody wanted to build out? Because Pilar's massive. You've got 3 mines there, the tailings dam. The whole facility there is really massive. It took us, 45 minutes to drive from the main Pilar mine out to another mine. So I think people don't really realize how large that property is and how much gold is under the ground on that property. But just building that facility, what do you think it would cost somebody today?
Just to build the mill, Eric, would be 400 million US. Then you've got to build 3 underground mines that are fully developed, another couple of hundred, So, and I think the valuation range, sorry, the valuation for Pilar with 140 Canadian, of which half that is the stakes in Chancery and Laiva gold. So yeah, we sort of went through that period, didn't we, where we bought 4 gold mines all at 5, 6 to 7 cents in the dollar. We bought Pilar back in 21 when gold was 1,700. We bought Laiva in 22 when gold was 1,600. Just to build Laiva would be at least 600 million euros, and that current round's done at 170 Canadian. Again, deep discount to replacement value. We bought Tucano. I mean, we started trading Tucano this week. It was a historic week called Amapa Minerals. The market cap, I think, is around 330 Canadian, but including 140 of cash. To build that would be at least $1 billion Canadian. And then we bought the lovely Gold Road in Arizona, which is an important silver royalty for Chancery, and that would be, I think that market cap's 40 million, and to build that today would be 200-300 million. But importantly, the permits will take you 10 years to build these things. So, from the moment you think you want to build something to when you finish it, it's going to be 10 years. So, yeah, you're not going to benefit from this.
It's not even a matter of it's not even a matter of capital. You could have all the capital you want in your pocket, but a matter of getting the permits and actually the permission to go ahead with the project makes it sort of an impossibility. So it's a massive barrier to entry at this point, isn't it?
Yeah, that's why I'm so excited to take Mario to Finland. I mean, Mario, since you joined Chancery in January, you've been to Ethiopia with us, with Eric. Where have you been? Brazil with Pilar.
Yeah.
Korea.
We were in Korea together.
Yeah, and now we're off to Finland in just 6 months. So yeah, what an exciting time to have you on board, and we just love having you on the trips, Mario. I must say, when we were in Sao Paulo the other day, you and I very nearly missed our flight, didn't we? Because we had 1 extra glass of wine before the plane took off. So so very excited to take Mario to Finland this week. And I think he'll really be totally shocked by the size and scale of Laiva Gold. So, yeah.
One last topic I wanted to talk about, and I know, Mario, you did an episode on this. It was maybe a week ago, or I think it was about a week ago. It was about AI, right, and the shift. So, what are your thoughts about that? Obviously, AI is a very hot topic right now, but it's a bit controversial as well because you have these data centers that are taking massive amounts of energy, generation. I don't know is this going to create another sort of commodity super cycle with everything that's happening?
Yeah, I mean, AI definitely needs a lot of raw materials, and I think the market is not really discounting that. They're just focusing on AI itself and the technology. But and I think a bit like the dot-com bubble, it's probably gotten ahead of itself a little bit. But I remember Alan Greenspan in 1998. He was saying that the market there was irrational exuberance, but it kept going up for another 2 years. So you never know. We could keep going higher, but I think AI is definitely something that's going to stay around. And I actually listened to an interview that Jeremy did like 11 months ago, where he said that with mining, AI will not be such a threat because AI can't, drill for gold or silver. So I think it's a good space to be. And also like tungsten and other raw rare earths or other minerals that are needed for AI, they're going to be in high demand, and the data centers as well. They need a lot of hard assets and commodities. So that's the way I see it. But Korea, where we were visiting pure tungsten, the Sengjong mine, they've had a massive bubble in their stock market because Samsung and SK, is it Hynix? It's called. I forgot the name exactly, but we saw a huge drop on Thursday in the stock market there. They've corrected down like almost 50% from the highs, but then on Friday they went up like 17%, the Kospi. So yeah, it's definitely something that's not going to go away. But I think the main lesson from these markets is that you should not leverage because when there are big corrections, you can get burnt. Like this young guy, Leopold Aschenbrenner, he's his fund has been taken over basically by what's his name, the big hedge fund. I forgot. Yeah, that's right. Ken Griffin. Yeah, yeah. So, but yeah, I don't think AI is going away, and it's a helpful tool. And but yeah, but the main thing I think is that a lot of people don't realize how important natural resources are to the whole AI infrastructure.
Yeah, absolutely. And as you mentioned, tungsten is a really important part of that, with tungsten carbide bits and things like that for etching, the chips and such. Um, the price of tungsten's run up, what is it, 1,000%, in the last year or something. So it's really insane. Um, uh, for those that didn't get a chance to participate in pure tungsten, that round, those rounds are closed for the moment. But we do have something that probably in the next couple of months on the tungsten front that we're going to bring to market and roll out. I can't say too much about it at the moment, but that's going to be a very exciting project. Jeremy and I have talked at length about that. So stay tuned, and we will bring that to you as soon as all the pieces are put together. But we are working diligently on that. So that's going to be an exciting project considering where tungsten is right now. Um, all right, guys, we've gone, I guess, about a half hour. And is there anything else that you guys want to touch on before we sign off for this week?
Maybe I'd say one thing, and I'm a bit sound like a broken clock here, old gold, but I think gold is about to have a huge move. I
Yeah.
don't know. I've been calling this for 1 or 2 months now, but I just feel it's going to have a huge move up again. And I've been listening to every one of Mario's shows, and yeah, it just feels like it's going to have a big move. So wait and
Yeah, we're
see.
basing right now, and I do think that the next leg up has the potential to be relatively explosive. So we'll see what happens. The market will do what it does. The manipulators will try to do what they do. Ultimately, you can only manipulate a market for quite a short time because the market just takes over. So that's just the way it works. But we will see what happens. I tend to agree with you, Jeremy. But ultimately, in the long term, there's only one direction for it to go. As things unravel geopolitically, I think any idiot can see where the price of gold is going over the next year, 2 years, 3 years, 4 years. We're in the middle of a commodity bull cycle in general. So if we're talking about precious metals, within those commodities, uh, I think that the price moves over the long term can be pretty incredible. I couldn't even begin to call where gold and silver could potentially go. But being in the business, I think that we're definitely in the right seat. So it'll be fun to watch anyway. All right, guys. Well, listen, Mario and Jeremy, I really appreciate your time. It's all, I know you guys are really busy, but it's great to be able to have you on and for you guys to carve out, a little bit of your day to join me here. So thanks a lot, guys. It's always great to see you. And for you guys watching, again, the links for Laiva and the Chancery rounds are down below. You can click those. We'll get you the info you need. And this is Old Gold signing off until next week. So we will see you then.